Oil prices are moving higher on potential trade talks between the U.S. and China, with Beijing saying they are open to speaking under certain conditions, according to reporting from Bloomberg. Crude prices have been under pressure since the announcement of President Trump's tariff plans, the International Energy Agency slashing its global demand growth forecast, saying the tariffs pose a, quote, substantial risk to the global economy. Joining us now, we have Lathryn Porter, WattLogic Energy Consultant. Lathryn, great to speak with you. So much going on at once that could impact the path forward for commodities. How are you finding clarity in this moment about where the price of oil is heading from here?
Well, that's quite a difficult question to answer. There's various competing pressures happening now on oil prices. Obviously, you've got recessionary fears that are driving prices down. You have fears of oversupply. You've got new supply coming on stream in the next year or so in Brazil, Guyana, and Norway, which is obviously going to soften prices. You've also just had a production increase from 8 of the OPEC plus countries, which makes the market go from what had been a fairly well-balanced market now to looking quite long. Now, we might expect OPEC to potentially cut prices to cut production to support prices, but perhaps not because of the internal dynamics within the group, and Saudi Arabia in particular wanting to punish people who've been cheating on their production targets.
Mm-hmm. And I had a conversation with a source earlier this week who said that there could be guarantees of direct purchases of LNG put into tariff negotiations between the U.S. and China. How are you thinking about that as a tool within the trade war?
Yeah, so that would be quite interesting. The whole trade war with China is going to have quite a significant impact on the energy spectrum for the US more broadly. It obviously doesn't just affect oil and gas producers, and clearly with oil prices where they are now, that's putting the profitability of the shale plays into question, and certainly making big questions around the prospects of new drilling, which is clearly a priority for the administration. But it also has a wider impact on renewable energy. That's obviously not such a priority for the Trump administration, but nevertheless, it makes all of the supply chains more expensive. So I think the energy sector more broadly would be pleased to see anything that looks as if it's going to be a softening of the somewhat hostile rhetoric that's been going on between the US and China.
And Lathryn, Steve Stosnick here in studio with me as my guest host today. He's got a question for you.
Hi, Lathryn. You mentioned a bunch of factors, none of them bullish for oil prices. And literally, as I'm sitting here, I see that inventories rose 515,000 barrels to the highest level since, I guess, July. Is there a bullish sign on the horizon, or are we just sort of looking at lower oil prices, which benefits consumers in the long run, but definitely does not tell a great picture for the economy potentially?
Yeah, I mean, I don't know whether in the long run it will be so great for consumers, because eventually you will get a correction as, the length in the market will be taken away by producers who can't operate economically at these levels. I think really the answer to that question lies probably outside the energy markets and more into the wider scope of what's going to happen with this effective trade war between the US and China and how the US manages these relationships, obviously not just with China, but also with Europe. There's huge pressure for Europe to take more US gas in particular. And so it really depends on what Trump's strategy here is going to be, whether this is a long-term play for him to maintain tariffs and have this sort of very strong arm tactic around his economic policy, or whether this is more of a short-term play to try and get people to move more in line with his wider policy objectives. And that's really a very difficult one to call. If we continue on the current track, then yes, there's not really good news for oil prices in the near future. And that's going to be particularly bad news, actually, for the US shale market.
The buzzword in the equity markets has been uncertainty, and it sounds like that's really the buzzword in the energy markets as well. Considering that there's a longer time frame, in terms of production, consumption, that sort of thing, how do you feel the market is best positioned to deal with that uncertainty? Do you feel that it's properly priced in right now?
No, I think it probably hasn't priced in. I mean, we obviously saw quite a significant drop in prices when these tariffs were announced. But interestingly, the energy pieces are not actually within the tariffs itself. So oil and gas and coal are largely excluded from the tariffs. So there's actually quite a bit of scope for things to get worse before they get better. Things like the internal conflict within OPEC and how much Saudi Arabia is willing to accept the pain of lower prices to try and force better compliance with the production targets within the group. So there's an awful lot of stuff that can move in a bearish sense here. And yeah, as you say, I think there's probably very little good news at the moment.
And Catherine, more of a geopolitical question here. I am just curious to get a sense of your thinking on how this trade war is impacting the relationship between U.S. allies and adversaries, and if there is a potential dynamic here where you could see U.S. previous allies and adversaries kind of teaming up, and how that might impact the broader oil market.
That's kind of an interesting question. At the moment, I think the adversaries, primarily Europe, are not particularly feeling that friendly towards China. I don't know how much you've been looking at what's happening in the UK recently, but we've just had a rather significant scandal around one of our last remaining steel companies, which is Chinese owned, and the Chinese owners appear to have deliberately restricted the supply of coking coal to this plant in an effort to force a cold shutdown of the furnaces, which has been a very significant political issue here, and lots of conversations about the UK's relationship with China and how the UK wants to position itself in relation to both Europe and the US in this wider trade war. Right. Now, Europe's also looking at putting retaliatory tariffs against some of these US tariffs, but that doesn't necessarily mean that Europe's cozying up to China, and it's definitely not cozying up to Russia because of the ongoing conflict in Ukraine. So I don't really think at the moment we're seeing very much alignment between non-US and US countries within this whole wider spectrum.
Yeah, really important context there, Catherine, as people kind of project out these relationships happening that may not necessarily be happening yet. Lathryn Porter, thank you so much. Appreciate it.